We have the largest bubble in the world ever and of all times. It's the everything bubble, and when it bursts, it's going to be something completely different from what people see. And I can understand it can be very difficult for a lot of people to understand, and what can happen here, because it's 17 years ago since we have had something as severe what we're going to see here. Tariffs or no tariffs, trade war, no trade war. We are in a slowing economy, and the big picture of this is that we have the U.S. housing market is really frozen solid, and this is what nobody really speaks of these days, which is interesting. I mean, it's something that is going to be very much in focus, I think, coming the next 12 months.
Welcome to Discourse with Christian. I'm your host, Christian White, and today is, of course, a returning guest, Henrik Zeberg. He's the head macro economist at Swissblock. Henrik, how you doing today? Thanks for coming on.
I'm great, and thank you for having me on again today.
We'd love to start off asking you, what's your current macro take as it relates to the financial markets, global economy, perhaps even geopolitics?
Well, from the 40,000 feet kind of thing, we have an economy that, a month and a half ago, everybody thought was falling over the cliff. And I said, well, it is not the time for it. We don't have the slowdown that we should see. Today, we got to see the non-farm payrolls coming out, so we'll see the ADP numbers that we saw on Wednesday were not very strong. And we also saw an uptick in the initial claims, which are some of the short-term indicators that I'm looking at to give me a gauge or a guidance on where we're heading. To me, we are tariffs or no tariffs, trade war, no trade war. We are in a slowing economy, and the big picture of this is that we have the U.S. housing market is really frozen solid, and this is what nobody really speaks of these days, which is interesting. I mean, it's something that is going to be very much in focus, I think, coming the next 12 months, because it's something that's slowly just deteriorating the economic conditions in the in the economy, and that will slowly create the situation where, whether we had a trade war or not, you're going to see a recession. So we have to understand that recessions are not something where you need a trigger for. It's something of a natural cycle that goes up and down, and you will never, ever see an economy that will be without a recession at some point. And we are long overdue seeing a recession at this point. We have the largest bubble in the world ever and of all times. It's the everything bubble, and when it bursts, it's going to be something completely different from what people see. And I can understand it can be very difficult for a lot of people to understand, and what can happen here, because it's 17 years ago since we have had something as severe what we're going to see here. So this is a very we are in a time where people think that things could be continuing up here from this from this point on. I think we have the trade war, which is maybe now stepping a little more in the background. And then, we have still the situation in Ukraine, which I don't think is something that is influencing markets a lot. We do have, which I think in the crisis, that we're starting to see what I think will be the major driver of the second part of the crisis, which is actually the U.S. deficit. And now that we've had Doge trying to cut costs there, but actually not being able to, and that is actually a very, very what you can say, sobering moment for a lot of people, I think, because what you're seeing is that even you had somebody coming out as tough and hard as they did, the net result is that it's going to be zero, or, and we're going to see that the U.S. deficit is going to actually increase. And I'm not talking trade deficit here. I mean, people are, mixing up the fiscal deficit with the trade deficit. This is the fiscal deficit, and the fiscal deficit is that is a very serious matter. And we see now that the credit default swaps for the U.S. debt is actually now the same, what we see for Italy, which is a country that, notoriously have had issues with its debt. So I think we're seeing something that will become not the first part of the crisis, but down the road, something that will need to be taken care of. And I can only see that in a very big structural shift where we see a monetary reset at some point. So from the outside, I mean, very, very high up. Not there yet. Still have the markets going up. I still think we're going to see that into the, let's say, early autumn at least. And then you're going to see something of a different development into the late of this year and into 26. And it's going to end up with a very big bang, or a not so good situation when the U.S. economy or the debt is going to come into the picture again. I think debt is going to be the whole thing we're going to see becoming an issue in the crisis as well.
Now, obviously, there's a lot of different variables out there. I know you mentioned the housing market. Of course, other folks have that I've had on and such have talked about, potential escalations over with Ukraine and things of that nature. Also, the Middle East, China. One of the things I wanted to ask you, because I find it particularly, relevant, of course, in the wake of, as some have coined, Russia's Pearl Harbor in a sense. I think if I understood you correctly, you mentioned that the Ukrainian conflict currently going on won't have as much of an impact on the markets, more or less.
I don't think it has so much of an influence or an impact on the markets. I think it's something. It's a war. I see it. I was told by somebody who's far more knowledgeable than I am that it's not a conflict. It's a war, and it's a war where Russia was the aggressor. That I also say. That's how I see it as well. And I think Russia has painted itself up in a corner here, where they have to go full throttle on this one here, and it's going to be a war of exhaustion at some point, because it seems like Russia will not do what it takes to step down, and the rest of the world and the West will need to support Ukraine. That's my point, and I don't think it's going to have an impact on the markets. I think it's a thing where we have seen so many times before that even though you have these terrible wars and conflicts and whatever have we around the world, it's not necessarily what's going to impact markets. You can actually go back and see that when you had the NATO bombing Serbia and back in the 90s, and the onset of the Iraq war and so on and so forth, you did not see any particular market development on that. And that's also, we have seen the market has been performing quite well over the last many months or 3 years here, even though we have had that war going on. So I don't think it's going to impact it at all. We always hear now this was the something that is overstepping the line, and this one and that one. And I think it's just going to be, the markets will be markets. They will react on not on market fundamentals so much, but on liquidity and on the FOMO and the fear, and that is what is driving the whole market now. Because what war or no war, I think we're going to see a decline in the markets at some point, and at this point here, it's just a matter of how high we can see it, keep levitating or moving up until we see that there's actually not so much fundamentals behind this.
Now, I know you've also mentioned about housing and labor and things of that nature. If you care to unpack that, or perhaps other variables or facets that you are tracking as it relates to the global economy, things of that nature.
Yeah, so I track the economy, because I think by the end of the day, it's really about how is the consumer doing. The consumer is the economy around across the world, and in the U.S. it's 70% of the GDP, and if the consumer is not well and not spending money well, then the economy will start to stall, and it's a natural process, as I said. So it's like you'll see this natural cycle where we try to make sure that you never get sick. I mean, every human being in this world will at some point, get sick and hopefully get well again. At some point, we will maybe not get well again, but it's that's the cycle of life, and that's also the cycle for an economy. And thinking you can kind of engineer away, business cycles is simply a misunderstanding. And this is where I think the Fed is overstepping and become, what I call the great hypers of things that they are trying to think that they can micromanage the business cycle to a degree that they say, okay, we don't want 2.3 in inflation. We would like it to be 2.0. And I mean, it's ridiculous to think that such a big mechanism, or like the global economy, that they should be capable of fine tuning that inflation level. It's simply so misunderstood. The whole Keynesian thinking is that you stimulate into an economic slowdown, but thinking that you can sit and fine tune that to this degree is nonsense in my perspective. So to me, I think we need to observe the consumer. We need to look at what is the labor market doing and what is the housing market doing. And the housing market right now is frozen solid. Nothing happens there in the U.S. which is a problem. At the point where if you start to see unemployment moving up, then it's going to be a very, very big problem on the housing market. And I think we're going to see a replay of what we had in 2007 to 9. And we're just not seeing this getting started yet because the labor market has been able to stay stronger for a little longer than I've expected so far. But it's coming. It's coming.
Now, taking a step back, as it relates to perhaps any thoughts that you have on other parts of the world that are perhaps alarming to you or that are possibly overlooked, as it relates to the markets, do you have any comments or anything you want to unpack there?
Well, I think that first of all that the rest of the world does not look too good. I mean, we've probably it's known stuff for people that China has a housing market that is also melting down at this point, and they've been they're working frantically on actually trying to stimulate that. Which they can do for some time with economic with monetary stimulus, but you cannot solve a solvency problem with liquidity, and this is what we will see once more. But they will try, and they will try because they have no other choice. They cannot just leave it alone and then just thinking, okay, we'll just let it go by its just let it go. So they will have to do something, and then at some point they will potentially create a market bounce, and then at some point it's going to top out. And I think the topping out will be the moment when the U.S. economy also really starts to decline. So China is a big problem. Japan, there is some very big issues out there as well as I see it, and all of Europe. Nothing in Europe really looks fantastic here. I mean the growth rates were okay, the last ones we saw, but we still see also the manufacturing numbers are still quite low, and I don't see that we'll be driving anything here in Europe. So I think we are in this situation where we are still hanging in there by the fingertips because of what the US is doing, and then because of the US economy, and then we'll have to see how long that lasts, and then the rest of the world will simply just be falling with the US at some point when the US economy starts to decline really.
And for those in the audience who are not in Europe and things of that nature, how, I mean, I know you kind of shared a little bit about European sentiments, just boots on the ground. How would you say the average person in your neck of the woods doing, or what are their thoughts, and how do they feel about perhaps their current, some of the current EU leaders, if you care to share?
Well, I think I don't know. I think these days here people are not the focus is really on what's going on in Ukraine. I think it's because it's at our doorstep. It's actually in Europe this is happening. It's a major war in Europe these days. So I think there's a lot of support to what the leaders do. There's a lot of rallying behind the leaders, the politicians in their support to Ukraine at this point here. That goes without, and you can see how Europe is actually, even though it's something else is being stated, that it's actually Europe leading and taking the responsibility in supplying the Ukraine with the most at this point. So I think this is what's going on. And then they're all, it's about, of course, there are the other discussion, there are the areas on migration and things also, which is also a topic here in Europe, absolutely. But on it's like the economic things are falling, behind that, or not really, surfacing when you have all of these things going on. So I don't think people are really realizing that that things are slowing to the degree that it is, and that we are going to see that things are not about to get better, it's about to get worse. And we see, you do see that the ECB also yesterday they cut it again, the rates here, the fund rates for the ECB, and they will keep doing that because they can see that there is a slowdown in the economy in all of Europe. So but it's not something that is, I think, common understood here, and the housing market here in Europe is not that bad, as compared to in the US. It seems like we're able to refinance a little more, but still, I mean, the consumer is not well off here in Europe as well. So, but not a problem right now and right here, and this is also what we need to understand. Again, Europe will be dragging along, so to speak, and maybe also even Asia, if as long as the US doesn't start to see a economic setback or decline, then I think it's going to be much more tough here in Europe as well.
And as it relates to tariffs, and obviously, recently Musk and Trump kind of got into it. Could you share perhaps any other thoughts or observations that you have as it relates to tariffs, things of that nature, and potentially where that could lead us and the world, if you will?
Yeah, sure. So tariffs is a terrible thing. I mean, tariff is because you think that you'll be better off if everything was produced by yourself, your own country, and you need to do that with certain stuff. You need to make sure that you're not exporting any technological advantages to any any foreign powers that will may not want you the best for you. So it's of course a thing you can use, or you can make use of if you have those kind of political perspectives. But in terms of trade with allies that are trading with each other and making sure that we make the most of it, that is that is where trade is good. And thinking that you'll help an economy by shoring up or by building trade walls is trade walls is not a good thing. It's something that will keep growth subdued, and by the end of the day, isn't competition good? I mean, I thought again when everybody thinks, we need to protect our industry. Well, you do not want to do that, because if you keep doing that, it'll keep being more and more immature in terms of what it needs to take on and what it needs to do. So you want it to be exposed to competition. Of course, you don't want it to be exposed to unfair competition. But we don't use child labor here in Europe, I can promise you. And we probably some of the most when it comes to regulation around things like that, or anything, in being fair on trade, well, then that's so having trade wars between Europe and US just doesn't make sense at all. And it's something that we should, open the doors as much. And I say that both ways, honestly, because I think we need to get trade going in the world. We need to make sure that we have the strongest knowledge to produce the things that we are relatively good at, and then you'll trade it with somebody else who's relatively better at doing something else. That is why it's Europe has even what people have said, it's not been a growth engine over the last many years. But if you look at the Eastern European countries that we took into EU many years back, it's actually been a fantastic story. And if you look at Poland, for instance, there's been a growth success for the last 20 years here, and that's not just because they got subsidies from EU. That is actually because they've got some investments in certain infrastructural projects, and they are now starting to generate a very, very strong growth contribution to EU. So we need trade, and trade wars are. Yeah, I hope it'll be something of the past, but I fear that it's something that'll keep coming up, because it's an easy thing to say. Well, it's easy to understand. I need to, I have this job. I need to protect, we need to protect our industry because we don't want the unfair competition coming from outside. Unfortunately, in the real world, in the larger perspective, economies and businesses need to be exposed to competition, fair competition, and then we will all grow stronger as, the innovative mind of people start saying, okay, if they are doing like this, maybe we should do like that, and then we'll keep making sure that we're getting better and better.
And as it relates to the macro picture and perhaps global shifts, things of that nature, I mean, obviously there's been talk of with some pundits and commentators, the decline of the West as a whole and the shift to the East, especially as it relates to more of a resource-centric East and gold and things of that nature. Any other observations on the macro level there, shifts that you're observing or think are not receiving enough attention?
Well, I think the big wheel is turning right now. What do I mean about that? I mean, we're talking the fourth turning here, definitely. I mean, we're talking about that the structures that we've been building up for the last 70 years after the Second World War, economically, politically, and so on and so forth. These are now being put under question here. We are saying, okay, at least what we see a lot in the media these days, and I think that is something which is of major importance because they were put in place for a certain reason, and they have, also had a good role to play in terms of making sure that we have had a fantastic period. Let's remind ourselves of that. The last 80 years since Second World War have been fantastic in terms of growth. It's been fantastic for the US. It's probably been, the best period, ever for the US. It's been dominating the world, right? The rest of the world. And so I think that we're now seeing the big wheel turning, and we're seeing this about debt that we talked about also, which I think is becoming a problem. we talked about it for so many years. I remember 12 years back, and I saw it was 13 trillion on the US debt. Now it's like, I don't know, 36 or 7. I don't know even know how high it is today, how high it is now. But it is becoming a liability, is a problem when you start to see credit default swaps moving up, and you see that, and down the road, the only reason why the US have been able to be so dominating in the world is because of the US dollar hegemony. And if that is now being put under question down the road, then, well, I think it's going to be a bad day, not just for the US, but for the whole, for everybody who has this, who's been thriving under the Western kind of way of living lives over the last 85 years. So I think, yes, there will be some challenges to this. And this is also where the Western world and the one that again, they're maybe becoming, will be challenges coming out from China, because we know that China has ambitions in terms of becoming a leading power in the world. They that's how they see themselves, and we know that, and we need to stand up. I mean, we are 5 million, 6 million here in Denmark. We're not going to do anything ourselves, but if you team up with the rest of the Western world, well, we are a sizable force, and we have been able to have a good say in how the world is going to be developing, should be developed or structured and governed over the last many years. And I sincerely hope that that's something we can maintain and do still. But it requires that we stand together. It requires that the countries of the West are saying, okay, this is the way we see things. This is our culture. This is the political trade system and so on we have. If we start to fight with each other, then we're going to have a problem. And if we do not get our acts together around the whole reserve currency situation, then we're going to have a big problem. I mean, I can't understand, honestly, Americans supporting that the dollar should kind of be substituted with the Bitcoin as a reserve currency or something like that. It really, in my world, doesn't make sense. I mean, it's like you sitting on a casket of gold there, and you said you wanted to just go away. It's actually a fantastic thing to have the reserve currency. I can promise you that China would like to take that over tomorrow if you ask them. So I think we need to understand that is really the reason why you've had the ability for the US in particular, to spend so much over the last many years without having had any inflation. That has been, actually, we've seen inflation been going down until the COVID moment, which now can become a problem if we don't have that US dollar hegemony any longer. Then you will see a world which is much more bipolar, maybe. So you'll have two sides. You'll have the BRICS, and you will have the Western world, and it can become it'll be a new world, and probably we are heading in that direction. So I hope that we will be able to stand together in the Western world and make sure that the way of living, the way we see things, will be something we at least can stand together of pushing into the world, so we don't need to be subdued to any other political system.
Do you see kind of that bipolar kind of a world where you've got the BRICS and you've got the U.S. hegemony, things of that nature? Do you see that as being more conducive in the sense that it creates more demand or competition, and thereby people aren't resting on their laurels, so to speak? I mean, could you perhaps share how beneficial or unbeneficial that might be to the world?
First of all, I mean, it's down to power. It's raw power by the end of the day. It's about who has the biggest military, who's capable of dominating the areas of the world where you see growth, and you see growth in Africa. I think you're going to see over the next few decades here. You've seen it in Southeast Asia. You see how all trade goes through Southeast Asia. Also, a lot of trade, 1/3 of the trade in the world goes through that area. And by the end of the day, who dominates those waters down there? Who dominates the Taiwan Strait and all this? That's why this is a big thing. And if all of a sudden that there's a question to the US dollar hegemony and the US dollar, and it starts to now it's actually it's strong at this point here, but I could see down the road that it could become severely challenged. Well, then it will probably be more about commodities, who are actually sitting with the real assets in the world, which is by the end of the day commodities. And then you'll have that the BRICS countries have a strong seat there, a strong card, at least in terms of, how should we be setting up the coming monetary system. This is about money, much more about monetary system than I think most people understand. And a lot of people think that the dollar's strength and that the dollar's position in the world is just something that they should take for granted. It's just, they just take it for granted. I mean, we have the pound sterling, which was also the reserve currency of the world back in the days, and it took a long time for it to actually to lose that position to the dollar, but it can happen, and it can happen if the structural things are starting to shift. And I'm saying that is the big wheel that we're seeing shifting at this point. This is the big wheel in terms of starting to see a misuse of the dollar as a financial weapon into conflicts and like that. It's been used over and over again, and if you're sitting outside and you all of a sudden you have the commodities of the world, or at least a very big portion of it, well, then you'll say, well, we be a part of that. And again, I think the BRICS countries are very um, not alike, and their genders are not very, aligned. So I think that it will also be difficult for them to really come up with a common agenda. And that's where, again, I think we in the Western world, we need to stand together and say, well, this is how we'd like things to be done. But I think that if when we're going to see some questions to the strength of the US dollar, and if inflation starts to move up, well, then I think we need to figure out really, really quick, and the politicians need to understand that this is very important, and this is what they need to focus on. As I've said it also here, and trying, I'm just the one who was a very pale voice here, and of course in all that talks that we see on the media. But I would like to say that the EU should actually start to build a gold reserve, and should try to make sure that the euro is strong as possible, and that we maintain that fiscal discipline in the EU, which is not similar to what we see in the US dollar. Because down the road, it's about who has the cleanest sheet, and if the dollar is getting challenged, we don't want that kind of hegemony to move somewhere else. We want the reserve currency to be something that, at least as I see it, in Europe or in the US. So I think there will be. I mean, we are talking about the geopolitical struggle here, and it's happening, physically, militarily, and so on and so forth. It's about where trade is going on, who is going to dominate the areas of the world where growth is taking place, and by the end of the day, that's about who has the biggest military, Air Force, fleet, Navy, and so on. And then it's about the monetary system, which is really, really key, because otherwise you can't finance it.
Wanted to go back real quick as it relates to you mentioned about the U.S. dollar and its integration more or less with Bitcoin. Could you unpack that and perhaps some concerns that you have, things of that nature?
Yeah, I think that there are the DeFi people, and when it comes to the whole to crypto, are maybe wishing to see something that if they really thought it really out to the end of it, really did not want to see. I mean, I do not want to see that you get a Bitcoin dominated reserve currency, because I think that is, you're taking the where you actually have it today, in the hands of US, in terms of how do we use that. Having a reserve currency is something that gives you an immense amount of freedom to overspend. And that is what the US has done for the last many, many years, and has done so also maybe too much, and now extended it, and it's being taken for granted that you could that. But you could have kept it. They could have been kept at a certain level, which would have been, and which has been beneficial for the rest of the world. We've been living in the Pax Americana for the last 80 years, and my family, my countrymen, and all of Europe has been, happy about that situation. But that can be challenged as we see it, and we see it right now. And of course, Europe needs to stand up, but I just don't understand how anybody who actually sits on the US dollar hegemony today, and any US citizen, will say, well, actually, we just want a Bitcoin dominated world, because by the end of the day, that would mean higher taxes for any US citizens. And I don't think that anybody would like that.
And as it relates to the challenging of the status quo and such geopolitically, do you see, for those in the audience who are not aware of your position, do you see China, as has been speculated amongst other macroeconomists, things of that nature, do you see China being kind of the global financial hub one day in the 2030s things?
Well, it depends. I mean, it depends. I mean, why is it that we see that the global focus, the global powerhouse of economic powerhouse shifts. Why was it that we saw that in the Netherlands back in the days in the 1600? Why did it move to England or to Great Britain, and then why did it move to the US? And I think it has to do with where do you see the strength in the in the economy, and the strength in the economy is really about how innovative can you become? So how productive can you become? Because the more productive you are, the better you will actually be able to navigate and to be a strong power in that world. And if we start to see that China would become more, let's say, more liberal, would actually be able to. I don't think in a planned economy that you can plan into becoming the strongest power in the world, because that's not how people work. People needs liberty, and the best universities in the world are still in the U.S. And this is where people will go. They will go find become doctors and this and that, and they will become innovators of things that will help the productivity level in that particular country, in the US now, and also in the Western world. But if we see that starting to, for certain reasons, people not wanting to go to the US and then you could see a deterioration of that kind of situation. So yes, then China could become a threat. But we also in the 60s, 70s, we were scared of Japan actually taking over the world, right? And now it's China we are scared of taking over the world. And the thing is that it's always easy for an economy to catch up by simply adopting technology, and that's we're going to see those extreme growth rates and productivity increases. It's more difficult the moment you get up to the kind of the line of technological development, and then you need to start pushing further. And that is where the whole situation with universities and how free you are, how can you open a new business, do you dare to take chances? While Europe is we're maybe being too bureaucratic here, and it's more about taxes and structures and all that. But you need to be daring and making that risk, and that is what is important for a thriving economy. Am I afraid that is going to happen in China to the same degree? Not with the current setup that they have. No, I'm not. And I don't think that is it, that they will be able to take over the world just as easy as a lot of people think. But it can become a very big challenge with the rest of the BRICS, and also especially if we mismanage the whole US dollar hegemony, the whole reserve currency situation, because this is, by the end of the day, there were two generals that in the 90s actually were talked about, being asked how could they actually counter the US at some point, and they said well, there's not a lot of chance we'll do that for the next 30-40 years, and this was in the 90s. But the only thing we can do is to actually weaken the dollar, and getting if that starts to falter, the US dollar hegemony, then we got a probably chance, because then the dollar will not be able to spend as much on military. And I just fear that that's actually where we are heading, and that's why the whole thinking of not austerity, but about that you need to make taxes and so on, balance in a way so that you just don't spend away, and you see another 2.5 trillion on the US fiscal deficit, because by the end of the day, someday, I think Musk actually said it today, someday it's going to break. There's going to be something and it's going to break. And I could fear that is what we could see in the next recession. And then who knows what will be set up. If first you can lose, you can only lose trust and credibility once. And if you lose that for real, then something really big needs to be done. And here I'm thinking about the US dollar. If trust, the credibility and the trust in the dollar, strength of that, and well, if you lose that, that's a big thing, and then you'll see something of a big fallout, and that can only be countered by structural reforms, monetary reset, which is what I call for at some point. When we get further down into this, not further, we're not there yet, but when we get into the crisis and further into the crisis, we will probably see that this is something we need to consider, because inflation, stagflation may be knocking on our door, and that will be a bad thing. And yeah, who knows in that situation what can happen. But again, my point is the big wheel is now turning, and it has to do with the debt situation and so on, and the crisis that we could be heading into can just be the igniter of whatever crisis we can see on the larger scale.
Wanted to transition as it relates to your thoughts on asset price projections, indices, things of that nature. Could you share perhaps your latest observations or thoughts?
Well, so I mean, I've said, I think I also said last time I was on here with you that I think we're gonna go higher in the markets. I think I said 65 to 6,800. I mean, I now on the S&P, I still stand by that. I stood by it also in April. That was people think it was a big thing. It was actually just a fast correction in a bull market. And that bull market will continue. And I see 6,800 is probably most likely now for the S&P. I see 25,000 on Nasdaq, and I think we're heading there. People say will start to come out and say, why should we get a recession now? Because the whole trade war is over, and that is so misunderstood because that is not where they have to understand that the economy is not just about things coming up in a trade war, and it's about the whole. That it's about the consumer and so on. So I think we're heading into that phase now, and I think we're going to see uh, Bitcoin reaching 148 to 60,000 maybe on that. And then you're going to have a fantastic alt season because all of that money will start to circulate into the alts as well, and you're going to see extreme rallies there still. And we are not there yet, and but It seems like it's coming. We start to see Ethereum overperform Bitcoin, which is normally a first step to that kind of development. So I think we're heading in that direction. And that's nice. That's great. And people think, okay, doesn't like a bull market, and how can that be bad? I just don't like it because I kind of think what can come next after that. And we see some of the in we see commodities actually breaking. We see oil, at least we've seen that breaking down quite strongly now, bouncing for the last for a few months, but not enough for the breakdown. And I think you're going to hit much lower. And why would we hit lower in oil? Because you're going to see a slowdown. And I think the Fed right now is being way, way, way too hawkish on the whole situation, sitting and thinking, as I said earlier on, they can micromanage the inflation level, and being too scared of the genie or the ghost that they let out in when they stimulated after Corona. And I think what we see now is simply that they overdo it again, just on the other side. So they overdo it now by being too hawkish for too long. We saw I was at the eighth cut we saw in ECB yesterday, and that's going to be before, and the Fed has done 1% altogether, and I think we're going to see the Fed is very, very late this time around. So I like that I see the bull market, but I fear that that is leading into the top. And I think that we have, in terms of the slowdown in the economy, we have the indications of that. And yeah, we'll have to see. I don't know if when the numbers come out today, but we'll have to see when the NFP numbers come out, what we see there. But we should start to look at where will the coincident indicators, as I call them in my business cycle model, when will they start to show some weakness? And when they do that, that's not the final moment. It's not the moment when the markets top out, but we then will start probably see that, as I said, the blow off top, and the markets go to extremes into an anticipation of liquidity coming in, the FOMO, and then we see the real top. So we're not far from it any longer, but we are still, we still need to see this development, and it's not going to be this what we see into the summer. I think there'll be a pullback in summer as we normally do, and then the final push into the early autumn.
And as it relates to precious metals, if you could unpack your thoughts.
Yeah, sure. So gold has been overperforming for quite some time, overperforming much better than I expected. As I usually say, when you have, if you have gold, silver, Bitcoin, gold, silver, gold miners, TDX, platinum, and one of them is standing out. Everybody likes to say it's gold that is correct, and the rest will follow. Now we saw silver jumping up a little yesterday. I still fear for precious metals, what you're going to see into a bust. And we haven't seen that bust yet. And we'll need to see how far gold can run in this environment before we get to it. In the bust, as I see it, you're going to see the Dixie moving up to around 120, 122 on the Dixie. And that's going to be quite heavy on weighing in, quite heavy on gold and silver. So I'm not sure we are there where like people like to think, and we are. Oh, the situation you talk about with the debt, Henrik. Why is that not going to bring gold a lot higher? Because there are big cycles and small cycles, and I think gold is overextended at this point. May overextend more before we see the correction, but I think there's going to be a big correction in gold before we see the real takeoff into a after deflationary development, because gold just doesn't do well in a deflationary environment when liquidity is a shortage. then it's then gold will not do so well. So for now, we'll have to see when it tops out. But if the market goes up and crypto goes up, well, then there is a chance that gold can also push higher before we see that correction setting in.
And as it relates to, I'll also ask any thoughts on bonds, or any observations that you've had lately.
Yeah, so I know it's a famous thing, and this is about the narrative all the time. So people say, "Oh, now, but it's because this, and that, and that's why I see the yields are going up on bonds in the long term bonds." I don't think that's the case. If you study this, and you'll actually see that when the housing market starts to decline, you'll see that for a certain while the bonds will stay uh, leveled, or just go sideways, and then all of a sudden they'll start to plummet. And I have shown this a few times on Twitter, I think, also, and or X as it's called. And the thing is that people need to understand that bond yields are a lagging indicator. That means that when the economy rolls over, then yields will come down later. So that's also, and that's what people have to understand. And it seems to be something that is so difficult for people to understand. They look at that and say, "Oh, now we have a problem." I don't think there's a big problem with that right now. I don't think it's the bond vigilantes that is out there now and trying to tell us that something is really bad with the bond market in the US. I still think bonds into the first part of the crisis, the deflationary part, is going to do really, really well. We're not there yet, but I think we will get there at some point.
What are perhaps some other misconceptions that people have, or perhaps something that just isn't receiving enough attention?
Well, the misconceptions, there are a lot. It's like so the misconception number one, I think, is that Trump will not let it happen, or the Fed will not let it happen. It's so misunderstood. I mean, you have had massive crashes before, and would any president or any central bank ever let that happen? So what people seem to think is that they got a magic kind of thing, a magic stick that they can just wave in the air, and then things will be fine. It's not how it works, and this is the massive misconception, I think, by a lot of people. I think it's a misconception or misunderstanding also of the role of crypto. I mean, I'm long crypto here, but I think it's going to crash. A lot of them, 99% of them, like to nothing almost for the most of them, because by the end of the day, there's not 10,000, 20,000 fantastic projects out there. And, when you ask somebody who's a crypto enthusiast and you say, why is it that this one is particularly good? Well, then you'll hear everything from a DeFi kind of observation, or inflation, or the US dollar is dying, and all these kind of things. But that will not keep that will not keep 10,000 different coins alive. So by the end of the day, there may be one fantastic, or two or five fantastic projects coming out of all these coins, and there may be the technology there is definitely something that's going to change a lot, but it's simply not the coins that by themselves, and the DeFi system understanding is not what I don't buy into that. So we'll have to see what happens into the deflationary bust, and I think that the whole crypto side is at one part. I mean, I've been on panel debates where people seem to think that the reason why you see this is because the dollar is dying, or because Bitcoin is just setting up a whole new regime in the world. That's not how I see it. So I think that is also a misconception from my side, and I can be wrong, but that's how I see it. I think Bitcoin is going to be an asset just like so many other things, but um, I don't think you're going to have all these coins in the future, and that's why people are really they seem to think that when you get heading into a crisis, and I'm often get the question, so Henrik, which token, which coin should we then be holding into that crisis? I'm like, none of them. I mean, none of them. So that's another one. So I think there are many things out there where people and always also think that this time is new, that this time is different, and there's going to be a different kind of rules apply to what we're going to see in terms of the development. Also not what I see. I may be just a little bit conservative there, but I've just heard it so many times now for the last 25 years that every time we see that it's back to the good old business cycles. When the economy rolls over, then we'll start to see the deflationary bust is bad, then the Fed comes in, and then you have the whole shebang in terms of how things are developing. And that's where I think a lot of people will be will have a proper understanding. And then I think also there may be a misunderstanding in terms of asset allocation and investment going into the next crisis, because for so long we've seen how the Fed has been coming out and just being able to print some money, do something which monetary on the monetary side, will push markets higher, and then we'll get out of the crisis by lowering interest rates. I think we're going to see something different this time, because I think you're going to see, of course, the Fed will come out like the central banks around the world, but they're going to trigger inflation this time, and that's what we already see in the 10-year yields. Has been actually in the last push we had after Corona, which I call the inverted Volcker, or the inverse Volcker moment. So when Volcker came out in 81 and killed inflation, and now we see actually the opposite. We came out, central banks, and stimulated demand into a supply crisis, and that actually overdid it. And now we have reintroduced inflation into the spines of the consumer, and that's why inflation will rise over the next coming years. Not in a straight line, and I think it's going to crash first with bonds going up, but you are going to see over the next decade, 20 years from now, when you and I sit and talk here, inflation level will be at much higher level than what we have seen for the last 10 or 20 years.
And how about as it relates to positioning and strategy? How might one hedge against some of the potential risks going along, and perhaps what's something that excites you as far as opportunities go?
Well, I'm actually quite excited by what I think we can see now in the in the blow off top, because I think it's going to be much more extreme than anybody really understands here. But let's see about that. Then, I mean, it's difficult to be excited about that we're going to see a bad development in the world, because it's going to be really not. It's going to be painful for a lot of people, and that is that's not a good thing. So I'm not excited about that. But of course, in the deflationary bust, you got to have dollars. You got to be long bonds as well if you want to stay safe. And it will be about wealth and capital preservation, and not so much about being too aggressive in that moment, because it's really about, sometimes if the markets falls 30%, it's really good to be, or 50%, it's really good to just have a 0% development on your portfolio, right? And then there'll be a time where I think the commodity super cycle will continue. And when I say continue, then I think we have seen the first leg up of that out of the Corona bottom in commodities. And then now we're seeing a decline, which is a natural thing. You always see a second wave. And then you're going to see the next leg coming up after the crisis, I think, so, or into the stagflationary part. So I think commodities, we're going to see an extreme commodity bull cycle bubble develop also, I think, and that's, you can excite me if you put it like that as an investor, because I think there will be a lot of opportunities there. Not there yet. I've had some discussions with people, knowledgeable people on that, but I don't think we're there yet. I think we're going to see inflation coming down strongly first, and then at some point we're going to see commodities becoming a fantastic opportunity.
Well, Henrik, I greatly appreciate you carving out the time to be on the show today. How can people learn more about you and get in touch?
Well, so the best thing is to go to on my profile on X at Henrik Zeberg. Please be careful of all the scammers out there. There are unfortunately way too many. Do not follow anybody who asks you for money or anything like that. I'm there. I'm with Swissblock, and you can also go to Swissblock's homepage and take a look at the things we're doing there. And then reach out. I will often be open for suggestions or ideas, as long as they are constructive.
Awesome. Well, Henrik, thanks so much for being on the show today. I appreciate you.
Thank you very much.
Quick ask: over half of you who watch the show regularly haven't yet subscribed. If you've enjoyed the show, you're finding value in it, subscribing is really the best way to support the channel. It's, of course, free. It literally takes 2 seconds, and it lets the algorithm know that this content matters. And of course, my commitment to you is going to be that I'm going to continue to bring on great guests, refine those questions. And of course, I'm always receptive to your feedback. If there's certain people that you'd like to have on, or certain questions, or this, that, and the other that you'd like to have as part of the show going forward, things of that nature, please let me know. I'm pretty easy to access. Anyhow, that's my commitment to you. If you can subscribe, that would mean a lot. Thanks.